Welcome to the weekly market analysis. This segment will explore the performance of Indian equity markets during the trading week of August 4 to 8, 2025. The week was characterized by significant downward pressure, particularly on Friday, driven by renewed global trade tensions and persistent FII outflows. The video will delve into key drivers of this week's market movements, analyze sectoral performances, and provide insights into what traders and investors should consider moving forward. The Indian equity stock market experienced a bad week, culminating in a sharp decline on Friday, August 8, 2025. This downward pressure was heavily influenced by renewed global trade tensions, specifically the US reaffirming a 25% duty on Indian goods, impacting key sectors like pharmaceuticals and automobiles. The benchmark Nifty 50 closed at the week at 24,363.3, marking a 0.95% decline on Friday alone. The Sensex plunged 765 points to settle at 79,857.79, slipping below the psychological 80,000 mark. This marks the sixth consecutive weekly loss for both Sensex and Nifty 50, a significant bearish signal. Broader market also suffered, the Nifty Mid-Cap 100 index closing 1.64% lower and Nifty Small Cap 100 index settling 1.49% down on Friday. However, in the previous week, the small cap and mid cap indices had shown some resilience, gaining 1.46% and 1.04% respectively. Several critical factors shaped investor sentiment this past week. The Q1 FY26 earnings season continued to present a mixed picture, while some companies like Tata Motors reported better than expected consolidated profits. Others faced headwinds as seen in the sharp decline in Volta's Q1 profit by 58%. State Bank of India showed strength with a 12% rise in net profit, contributing significantly to the public sector bank's record Q1 profits. However, foreign institutional investors' activity remained persistently negative with a substantial net selling across the week. For example, FIIs offloaded equities worth 4,997 crore on Wednesday and 2,566 crore on Monday. This continuous outflow amidst global uncertainties and concerns about elevated Indian equity valuations weighed heavily on the market. Global cues were primarily negative, with the imposition of US tariffs on Indian exports, including a 25% duty, a major cause for concern. The Indian rupee's performance against the US dollar also reflected in this stress, depreciating to close at 87.71 on Friday. Brent crude oil prices showed volatility with a decline of 1.15% to $68.87 a barrel on Monday, August 4th. The RBI Monetary Policy Committee meeting from August 5th to 7th was closely watched with expectation of possible rate cut to boost growth, although a status quo was ultimately maintained. Sectoral performance reflected the overall bearish trend, with most indices ending the week in red. The Nifty Realty, Nifty Metal, Nifty Pharma, Nifty Auto, Nifty Private Bank, and Nifty Consumer Durable sectors were the biggest drags, all declining by 1 to 2% on Friday alone. The Nifty IT index also closed in red, down to 0.95%. Defense stocks experienced a sharp drop on Friday, pushing the Nifty India Defense Index down nearly 2% due to weak earnings, profit booking, and lack of fresh triggers. In contrast, some individual stocks provided limited support amidst the downturn. NTPC and Titan were among the nifty gainers on Friday. Shares of UPL rallied significantly on Monday after reporting narrowing Q1 losses. Tata Investment Corporation also saw its PAT net up 11.6% in Q1. Expert opinions suggest despite short-term challenges, the correction might present long-term opportunities in quality large-cap and value-oriented stocks. Other concerns impacting the market include the spike in India's fiscal deficit in June 2025 and the potential impact of US tariffs on key sectors. This analysis is based on information available as of August 8th, 2025, and the market conditions are subject to change. Consulting a financial advisor before making any investment decisions is always recommended. Thank you for watching this week's in depth market update. Stay informed and invest wisely.